Into the structured products market, reviewing 2024, which was a record year, as well sharing my predictions for 2025. So let's jump in. 2024 was an outstanding year across all regions. US basically beat a new record, $194 billion sold in structured products, 43% growth year on year, which is amazing. Canada saw an increase of 31% overall between GIC's notes, but what's striking is that par notes and principal protected notes grew almost 50%. Clearly a massive increase and leading the market in terms of growth. Across Europe, growth range between 12 to 20% depending on the region. So what has been driving this success? Three factors: massive rollovers and an outstanding performance of the products. With more than 95% of all products across these regions providing a positive performance and expiring early, especially the auto calls, that helped this growth. Second is the opportunities in asset classes like credit, rates, commodities, even QIS had a considerable growth in Q4. And then equities saw also a high demand, especially tech, with a higher volatility. It means that they were offered better coupons than, in normal benchmark indices. Now, as we kick off 2025, it's time to look ahead. And based on last year's trends, I put together 5 predictions for the structured products market. First is the single stock decrement indices. There's been a lot of rumors between the performance of single stock indices versus benchmark, and especially with what happened in France with Stellantis and a few other stocks. I think there is a review of what is happening on what's the value of single stock indices. I don't think it will disappear, but it will definitely decrease. Then, second is I think it will be a very strong Q1 in Europe. Why? Especially because there is a lot of auto calls with an observation in March, and that will give momentum in the first few months of the year. Potentially, it might start to decline the growth, especially as lower rates and lower volatility. Third, U.S. growth. The US market, which has been growing outstanding, almost 200 billion, I think it will get 240 billion next year. Again, a lot of products expiring early, but also issuer callables, which are in the money, and with lower rates, definitely the issuers is going to call a massive amount of volume, which will need to be reinvested. Then, my fourth prediction is regulatory changes in Europe. I think with Trump election, the European market is thinking, how can the financial services be competitive when it comes to the U.S. banks? So clearly, I think there will be a concern at the European side, at the European level, to make sure that Europe is competitive. Last is growth in alternatives and custom deals or RFQ deals. Why? I think, with volatility coming down, with lower rates, I think investors and advisors and even distributors will need to look for custom deals, especially on different asset classes like rates, credit, commodities. So I think we'll see a big demand over there. So there you have it. 2024 was a record year. I believe that 2025 will be a roller coaster across Europe, but as well as in the US. So let's see. I hope you like